Mortgage rates just dropped to the lowest level in almost a year. But here's the real story. Most home buyers will sleep right through it. Don't be that home buyer. If you've been sitting on the sidelines thinking, I'll wait until rates go lower or until prices crash, this moment might just pass you by. Because here's the truth. Mortgage rates don't move in straight lines. They drop, they bounce, and they take opportunities with them. And right now, with rates finally dipping into the mid to low sixes, this is one of those windows you'll look back at and say, wow, I should have moved. In this special episode of the Martini Mortgage Podcast, I'm going to share 5 smart ways to buy a home while rates are at 11-month lows. These are not generic tips, but proven strategies you can actually use to save money, lower your stress, and make the smartest move of your life. Before I start mixing up these 5 smart and proven easy ways, I need to make those compliance people happy. I'm Kevin Martini, a certified mortgage advisor and producing branch manager, NMLS 143962, with the Martini Mortgage Group at Gold Star Mortgage Financial Group Corporation, NMLS 3446, equal housing lender. This podcast is here to inform, educate, and entertain, not to provide legal or professional advice. Okay, with that out of the way, let's get into it. The first thing you need to know is this. When mortgage rates fall, the crowd doesn't jump in right away. It's like the beach at sunrise. A few early risers grab the best spots. Everyone else wanders down hours later, towels in hand, and looking around at the crowd and wondering, why is it so packed? That's what happens right now. Mortgage rates are down, inventory is slowly loosening up, and most home buyers haven't noticed yet. Here's the Kevin Martini translation. You have an opening to act before bidding wars kick back into high gear. This is not about timing the market. It's about recognizing leverage when it's here. Now, knowing the window is there is one thing, but how do you actually take advantage of it? Step 1 is simple. And it's the move most people overlook. Here's the thing about home loan rates. They're like a roller coaster. Fun to watch, but you don't want to be hanging upside down when the car swings back. Yes, Raleigh mortgage rates are at their lowest in almost a year, but they can and will jump around. That's why the first move is simple. Talk to a mortgage strategist at the Martini Mortgage Group about locking a rate now. Not because you're committing today, because you are locking protects you from the bounce. If rates dip lower, many programs let you float it down. But if they bounce higher, you're stuck paying more every single month for the next 30 years. Think about it like airfare. If you watch ticket prices jump overnight, you know the feeling. Same here, except we're taking tens of thousands of dollars over time. All right, so you protected yourself from the bounce. What's next? Here's where it gets really fun, because right now buyers have a chance to grab something that usually disappears very fast. Here's the secret. When rates were 7% plus, sellers got creative. They started offering concessions and credits towards closing costs, even paying points to buy down your interest rate. Those concessions are still on the table right now. But here's the kicker. The second buyers flood back in, the moment that happens, sellers will stop giving them away. Right now, you have a rare overlap. Lowest rates and motivated sellers. That means you can structure a deal where the seller helps you fund your rate buy down or hand you thousands in closing. That's leverage. And that leverage doesn't last forever. Okay, so concessions are powerful, but let's get real. This next one may be the most important shift in mindset you can make as a buyer. Everyone obsesses over rates. It is 6.5 or it's 6.7. But here's the truth. You don't live in the rate. You live in the payment. If your payment works for your life, for your budget, and for your long-term wealth plan, that's the win. And here's the practical tip. Build a range. Ask yourself, what's my comfortable payment? What's my maximum? Then run the numbers with your mortgage strategist at the Martini Mortgage Group inside that box. When you focus on the payment, you take the emotion out of the rate chase. Because honestly, whether rates fall another half a point or not won't change your life as much as finally owning a home will. Now, once you start thinking in terms of payment instead of chasing a magic rate, the next step is to explore your options you may not even have considered. With mortgage rates lower, doors open, not just to standard 30-year fixed loans, but creative options like temporary buydowns. A temporary buydown is where your payment starts lower and steps up gradually. Don't forget down payment assistance programs. Yes, they are more accessible now than ever. But here's the warning label. Don't chase shiny object loans that look great in 1 year and wreck you in 5 years. The goal isn't the lowest sticker price. It's the lowest lifetime cost of borrowing. That's where working with someone who takes a fiduciary approach like the Martini Mortgage Group matters. You want strategies aligned with your life, not just a loan shoved across the desk. Of course, even with creative strategies on the table, I still hear this one all the time. I'll just wait for the crash. Let's deal with this head on, no pun intended. Let me be blunt. That's not happening. Over 40% of U.S. homeowners don't even have a mortgage. They're not going to panic sell. They'll just sit tight, wait you out, and watch their equity grow. Meanwhile, every time rates drip, buyers' demand comes roaring back. Prices might not skyrocket, but they don't have to. Even steady growth means waiting costs you equity, tax benefits, and most importantly, stability. The real crash isn't the market. It's the missed opportunity. So if we zoom out and look at everything together, rates, concessions, payments, and that myth about a crash, the big picture becomes clear. Mortgage rates have cracked lower. Sellers are still flexible. And tools exist to make homeownership more affordable than it's been in years. This opportunity isn't about catching the perfect rate. It's about using this window to create clarity, stability, and wealth for your future. Because here's what you don't want. You don't want to look back 6 months from now when rates are bouncing higher, inventory is tighter, and prices are creeping up and think, I missed it again. And here's where it comes together. If I could leave you with 3 moves to make right now, they would be this. Number 1, get clear on your numbers. Know your comfort payment. Number 2, explore leverage while it's here. Seller concession, buy downs, lower rates, stack the deck in your favor. And number 3, stop waiting for perfect. Perfect doesn't exist. Opportunity does. If you're ready to see how this window could work for you, let's connect. My team and I will run the numbers, explore every strategy, and help you buy smarter, not cheaper. Because the truth is, buying a home is never about timing the market. It's about timing your life. And if life is telling you it's time, that may be the best shot you'll get for a long while. Thank you for sharing your time and listening to the Martini Mortgage Podcast. Please share this episode with someone you care about who may benefit from it. And if you have questions about what you've heard or want a confidential and complimentary conversation, I invite you to give me a call, Kevin Martini, with the Martini Mortgage Group. And you can reach me by dialing 919-238-4934. Again, that number is 919-238-4934.